Is a lengthier recession ahead for the U.S. economy because more people are working from home? Our Steve Liesman takes a look in our America at Home series. Steve.
John, thank you. Yes, when you idle productive capacity, that's one of the things that causes recessions and can lengthen recessions. And one of a bit of the thinking around this idea of Americans working at home is it could potentially idle a lot of capacity out there in the economy, and that, as the economy adjusts, could lengthen it. Let's look at working from home by the numbers and look at the potential impacts here. 28% of Americans, according to our CNBC Change Research survey, they're working from home due to the coronavirus. Some 44%, according to an older survey, they want to continue working at least partly from home, or they're unsure about whether or not they want to return. 39%, according to a Harris poll, says of urban dwellers, they've thought about moving out of the city to a less dense location. Okay, so what does all this mean? What are the challenges it presents for the economy? Well, first, you have idled office, retail, and residential space. Second, you have potential debt troubles that come from less use of that space for leveraged real estate. Third, potential reduction in government revenues from tolls, public transit, and property taxes. You can see the very beginning of a problem here when you look at mortgage delinquency rates from S&P for commercial mortgage-backed securities. Now, all of this, a lot of this is going to be temporary. It's a massive increase to nearly 7% for commercial mortgage-backed security delinquencies. Some of that's going to be all temporary, but the question is, does some of that remain and you have some lingering delinquencies? Okay, that's all the bad news. There's always in economics an offset. Here's some that you can puzzle out here. Well, you'll probably have a decline in new construction, so you don't have as much capacity coming online. You'll have some reduction in rents. You also have lower interest rates. That helps the owners of the real estate. Possible need for more space for social distancing, at least for a time. And then the gazillion-dollar question, are workers more productive? Are there gains to the overall economy because they're not commuting, because they're doing better working at home? That's a question that needs to be asked, Morgan, as to whether or not we have gains on the backside. They tend to take a little bit longer. One other thing I want to mention, all of our surveys show that wealthier Americans have the opportunities to work at home compared to lower income Americans. So there is a potential increase in inequality here, inequality of opportunity when it comes to the opportunity to work at home. Morgan?
Yeah. It's fascinating, and it makes sense, Steve. I got to think there's ripple effects here potentially to the muni market as well when you're talking about some of these shifts, too, including things like public transportation. And, of course, as we know, retail investors are very heavily involved in that market, too, so it's probably another one to watch.
If I could
Steve Liesman, thank you.
If I could add just one more thing, which is just real quick. A road requires X numbers of dollars to maintain. And it doesn't really change that much if fewer people use it. Same with an office building. There's this operating leverage idea. At some point, the operating leverage becomes not economic for the owner, be it a company or even a government.